Alphabet is a money-making machine. It's Google's parent company, so it's become a part of everyday life for most of us. It's a high-quality corporation with a bulletproof balance sheet and a stellar AA+ credit rating. Analysts think the stock has plenty of room to run, both in the near term and longer term. I'm mostly focused on the long term, and I think it's got plenty of room to run too, which is why I'm buying more Alphabet stock, both for myself and for the public growth and income portfolio that I manage. Hi everybody, Mike Nadell here for the Dividends and Income channel. Before I talk more about why Alphabet looks like a great investment, do us a favor to help grow our channel. Please hit the thumbs up at the bottom of the video, subscribe to our channel, and ring the bell so you get notifications of new videos as we publish them. Okay, now let's talk about Alphabet's history, its business model, why I keep buying more of it, and how it might interest those who use a similar long-term investing strategy. First, let's get right to the $2 trillion elephant in the room. Alphabet does not pay a dividend. I totally understand that it might not be right for some investors who own only income-producing stocks, which undoubtedly describes lots of folks in our audience here at Dividends and Income channel. But I'm a dividend growth investor myself, and I own a few exceptional non-dividend payers like Alphabet and Amazon. I happen to believe that there's room in a diversified DGI portfolio for companies like those, and I'm sure that many of you believe it too. So that's why I'm talking about Alphabet today. Looking at Alphabet's past opens a window into why its present and future look so promising. Back in 1995, Stanford University student Sergey Brin was assigned to give a campus tour to prospective grad school student Larry Page. Page decided to attend Stanford, and the two realized they shared common interests. Working from their dorm rooms, they built a search engine that used links to determine the importance of individual pages on the World Wide Web. At first, they called the search engine BackRub, but they soon changed the name to Google as a play on the mathematical expression for the number 1 followed by 100 zeros. Silicon Valley investors were intrigued, and Sun co-founder Andy Bechtolsheim wrote Larry and Sergey a check for $100,000 in 1998, and Google Inc. was officially a corporation. Soon after, Page and Brin moved their headquarters into a garage in suburban Menlo Park, California. In 1999, the company's 8 employees moved from the garage to an office in Palo Alto. Later that year, Google held its first press conference to announce it had received $25 million in equity funding from venture capitalists. In 2000, Google started selling advertising that was visible to people using the search engine. Ad sales would go on to be the key to the company's eventual riches. In 2001, Eric Schmidt became Google's CEO after having served in leadership positions at Sun Microsystems and Novell. 3 years later, the company started offering Gmail, which quickly became one of the largest online mail services. In August of 2004, one of the most anticipated IPOs ever took place, with Google debuting on the NASDAQ exchange. Figuring that they do pretty well as large owners of Google stock, Schmidt, Brin, and Page cut their annual salaries to $1 apiece. 2005 was a big innovative year for the company, as Google Maps and Google Earth were born, and the firm acquired a little-known mobile phone software company called Android. That led to a stretch with one innovation or major acquisition after another: Google Talk, YouTube, DoubleClick, Street View, Chrome, Android mobile operating system, Waze, Nest, and so much more. In 2015, Google folded itself into a conglomerate it called Alphabet. Page was the CEO, with Sundar Pichai taking over as CEO of the Google unit. More innovation followed: Google Home, Pixel phones, Waymo, Chromecast, Google Fiber, Google Photos. You get the idea. With success came attempts at government oversight and regulation. In 2017, the European Union slapped Alphabet with a $2.7 billion antitrust fine, and the following year there was a $5 billion fine from the EU. That didn't slow down Alphabet a bit. They topped $100 billion in sales for the first time. In the winter of 2020, Alphabet joined Apple and Microsoft as the only trillion-dollar publicly traded companies in the world. It's now approaching a $2 trillion market cap. Sometimes when I do one of these historical looks at a company, I'm like, what does 1896 have to do with why I'd invest in a stock today? Well, with Alphabet, a look back through the last quarter century illustrates exactly why an investor might be interested. So much innovation, so many iconic products and services, so many major money-making brands under the Alphabet umbrella. Alphabet is a wide moat company that is using its strength in search and advertising to continue to build for the future. It's established a foothold in the public cloud space, and that's getting stronger every year, with a veritable who's who's list of major corporate customers such as Home Depot, Toyota, McKesson, Spotify, Goldman Sachs, and Unilever. Its autonomous car technology business, Waymo, seeks to challenge Tesla, Apple, and others in that realm. Alphabet is using artificial intelligence to make inroads in health research and treatment. From travel to energy to gaming to banking to defense to infrastructure and beyond, Alphabet is using its size and leverage to create new opportunities for its business to grow. And Alphabet is all about growth. Whether we're talking about earnings, revenue, free cash flow, or EBITDA, it's been up, and away for years. Meanwhile, there's a ton of cash on hand and relatively low debt. Always a good sign. No wonder Standard & Poor's bestows a near-perfect AA+ credit rating on the company. When a business is this well run, this innovative, and this successful, naturally its stock price moves in only one direction over the course of years. Alphabet is up more than 800% over the last decade, triple the gain of the S&P 500 index. The price recently touched $3,000 a share, and it's still pretty close to that level. And the forward PE ratio is about 25, so it's reasonable to ask, is Alphabet still reasonably valued for investors? Analysts, such as Morningstar's Ali Mogharabi, believe the stock has plenty of room to run. He says that driven by its advertising and cloud businesses, Alphabet is valued at $3,400, meaning it's trading at about a 20% discount. CFRA analyst Angelo Zino is another Alphabet bull, saying, "We like its early leadership in areas with massive long-term potential, including machine learning, natural language processing, self-driving vehicles, quantum computing, drone delivery, smart homes, and wearables." Zino puts fair value at more than $3,400. Alphabet's attractiveness as an investment can be seen in Value Line's take. Its analysts give the company top grades for financial strength, relative safety, and timeliness. Value Line's medium-term target price suggests 20% upside, and its long-term forecast calls for more than 75% price appreciation to $5,000 plus in 3 to 5 years. The Morningstar, CFRA, and Value Line calls aren't surprising, given that surveys of dozens of analysts show strong sentiment across the board for Alphabet. Of the 27 analysts monitored by TipRanks, 25 call Alphabet a buy, with an average 12-month target price suggesting a 17% upside. Even the lowest target price in the entire survey, $2,965, is higher than what I just paid to bring more of the stock into the growth and income portfolio. Meanwhile, 47 of the 49 analysts tracked by Refinitiv call Google's parent company either a strong buy or buy. That's some serious conviction. So in the views of dozens of analysts, and me too, Alphabet is an investment that's worth considering today. As I mentioned, I've been gradually building my Alphabet position over the years, and I expect to continue for the foreseeable future. I've also been building a position in the growth and income portfolio, the real money project I launched in June 2020. For a look at my most recent Alphabet buy, please click the link in the description. There's also a link in the description for the growth and income portfolio homepage, where you'll see all the positions and a list of articles. Once there, become a subscriber to the site, and you'll be notified whenever I write an article about my transactions. For dividend lovers, I also manage the Income Builder portfolio, and there's a link in the description for that too. Alright everybody, that's all for today. Again, please give us a thumbs up, subscribe, and ring that notification bell so you don't miss out on any of our content. Take it easy everybody, back at you soon.